Anxiety hitting the real estate market. According to a new survey from data platform Dynata, 81% of Americans say it's hard to find a home to buy or rent right now.
Bitcoin is holding above 20,000. We have Ether above 1,100. So they have kind of bounced off from the worst levels, and it looks like the downward momentum has stopped a little bit.
In today's business world, it's more important than ever to think about what you own that a person would want to buy from you in a decade. With the ever-changing landscape of technology and the global economy, it's more important than ever to be aware of the value of your assets and how they may change over time. In today's video, we'll explore the question of what it is that you own that an intelligent person would want to buy from you in a decade. Now, most people believe in investing in the housing sector. I mean, that's one thing whose prices are going up and up, so much that the majority of people are not even able to buy or rent these days. So stay tuned to the end of the video, as Michael Saylor explains if real estate properties are a better option than digital property. If you're new to the channel, be sure to subscribe. Let's dive into the video.
So equities are currency derivatives, partial currency derivatives. Bonds are almost complete currency derivatives. Commercial real estate is a partial currency derivative. The currency is currency derivative, right? It's a full currency derivative. So what do I own? And the answer is, I want to own scarce property, scarce desirable property. What is it that you own that an affluent, intelligent person will want to buy from you in a decade? That's the question you have to ask yourself. So if you're owning things that will last a decade, right? I mean, if you buy a car that's not going to last a decade, it's not really an asset, it's depreciating. But maybe you own a sports team or a Picasso painting. I don't know. Will people want to buy gold from you in a decade? Will they want to own the building that you own in a decade, right? Will they want to own the intellectual property rights? Well, it all depends. Bitcoin is scarce desirable asset because it represents digital property. If I own $1 million worth of buildings in Moscow in a decade, who's going to want to buy them from me? Presumably affluent, intelligent Russians. But will an affluent, intelligent British person or Chinese business person or American want to own that asset? The same is true. You own $1 million worth of buildings in Nigeria. Who's going to want to buy them in 10 years? Who's going to want to buy what you own? If you own $1 million worth of Argentine pesos for the next 10 years, they're going to be worth $10,000, right? So you're not going to want to own that, but owning $1 million worth of buildings in Buenos Aires is only going to appeal to someone that wants to live and work or use that real estate in Buenos Aires, and you're going to pay the tax and the maintenance costs in between now and then.
Michael Saylor suggests that one should own desirable, scarce property as a good investment. All other assets like equities, bonds, currency, commercial real estate, all are somewhat currency derivatives. Things that don't last a decade should be avoided when thinking of investment. He does agree that real estate is somewhat a good future investment, but it all depends on where your property is, who wants to buy it, and likewise. But with digital property, one doesn't need to worry about such things. Why? Because they're digital. Not just this, with real estate, you have to continuously worry about paying tax, maintaining now and then, regulations, etc. He even tweeted recently saying, "There are thousands of choices, but just one Bitcoin." He strongly agrees that Bitcoin is one such property that's going to maintain its value in future, without you adding extra maintenance dollars in them. It's scarce, it's desirable, and it's digital. Now, high inflation and interest rates are causing many people to take a step back from investing due to all the volatility in the market. Let's see what Michael Saylor has to say on this. And if you find this video informative, be sure to like and share.
So interest rates are going up because there's macroeconomic headwinds blowing. The real problem is inflation. If inflation's running 20% and the interest rates go to 2%, they're not going to stop the problem of currency collapse. They're just going to create a near-term turbulence. And if you're a trader, you may get caught in that turbulence. But ultimately, if you're an investor and you're concerned about preserving your wealth to give to your children or your grandchildren, then whenever you're in an inflationary environment, your strategy is simple. I have to convert my weak currency into a strong currency. ideally convert my weak property into strong property. And that strong property, I want to move out of the country. I want to move it out of the jurisdiction of a politician that may confiscate it or tax it away, right? And that's why, converting $1 million of pesos into $1 million of dollars in Buenos Aires won't help you, because eventually the politicians will freeze your bank accounts, convert it back into pesos, and devalue it 20-1. That won't help. Right? Converting $1 million of pesos into $1 million of dollars, and then buying $1 million worth of big tech stocks in the US may be a better idea. If the big tech stocks are monopolies, they'll be able to raise their prices, hold their cash flows, and hold value. Monopolies will be fine, right? What is a monopoly? It's scarce, desirable property. If I offered you a monopoly with unfettered ability to change the price of something that, like oxygen, sell oxygen to New York City, you're probably going to do okay, right? The problem with even monopolies, though, is over time, monopolies get regulated, right? Like in theory, the richest person ought to be the person that sells water in New York City, but they're not the richest person, because the New Yorkers get together and they decide that they don't want the water company to raise the price of water to $100 a gallon, even though you'd pay it if you were thirsty. So what can I buy that's going to hold its value over time that represents scarce, desirable property? Not just scarce, because there's a lot of things that are scarce that aren't desirable, right? Scarce, desirable property. And I think one of the obvious things is digital property, right? If I created a city in cyberspace with 21 million blocks and nobody could make any more, and it was going to last for 1,000 years, and it was the dominant city and everyone wanted to live there, would you want to own one of those blocks? And I think the answer is yeah. And that city is called Bitcoin.
Inflation and interest rates are touching the clouds, and day traders are getting caught in this turbulence. Michael Saylor points out that it's a very tough time for day traders. But as an investor, you're always looking for ways to grow your wealth for the future. You want to convert your weak currency into strong one, and weak property into strong property whenever there's an inflationary environment. But in today's economy, it can be difficult to find these strong investments that will hold their value over time. Michael Saylor suggests that monopolies are a good investment, but even they get regulated over time. So what can you buy that will appreciate in value? Something that is scarce and in high demand. According to him, Bitcoin is the answer to all. He even tweeted recently that you will own Bitcoin and you will be happy. Do you agree with him? What assets will hold its true value over time? Bitcoin has gone deep down from its all-time high and is hardly maintaining its value over 20K. Even long-term holders have started liquidating. So what are your thoughts on this? Let me know in the comments below. For more videos like this, don't forget to subscribe. Also hit that bell icon to never miss any video. I'll see you in my next one. Adios!